Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, March 2nd, 2021. I am Frank Ochoa, aka PivotBoss. First off, I do want to say thank you for joining me yesterday afternoon for our PivotBoss monthly market outlook for the month of March. I do have the link to that recording in the description below. If you have yet to see that recording, you can click the link to watch it. It's about an hour of a whole lot of charts, talking futures, talking stocks, and also taking your requests. Please check it out. Also, I do want to point your direction to pivotbossmasters.com/profits. We do have a Pivot Boss Masters open house that will be live tomorrow. And I'd love for you to join me. You can go to pivotbossmasters.com/profits and see the special offer we have going on. Right down here, March 3rd at noon, 12 p.m. Central Time. We will do a live open house and give you a peek behind the curtain of Pivot Boss Masters and talk about all of the training and proprietary tools that we have available for you at this time. You can click the link here or click the link down here to join the Zoom webinar at that time. You can also look through the various items here on the list. We do have live training coming up next week for Pivot Boss Masters members. So if you are a Pivot Boss Masters member already, you have access to this live training already free, included with your original payment. So right now we have Squat 2.0 coming out along with the Pivot Boss Oscillator with advanced volume and some live trading as well. And again, there are a ton of incentives for you to join Pivot Boss Masters at this time. So we will go through the Pivot Boss Masters site tomorrow for an open house at lunchtime, 12 p.m. Central. Please join me for this special event. All right, let's take a look at the markets now. Yesterday after the close and heading into the last hour of the day, we did talk about a fade after trend day. Anytime you have a significant trend day like this, there tends to be a fade heading into the next RTH open back toward the midpoint or this middle portion of that previous range. That midpoint is very, very important there. And you can see the breakout point was here, the midpoint is there, and we got very, very close to reaching that mid pivot here today. The mid pivot is 38.62 quarter. Today's low is just shy of that in the 66s, 67s perhaps. And right now what you see again is another opportunity for this market to squeeze higher. If there's a failure to hold that 38.60 or perhaps even 38.50, that could lead to a failure that opens up a bearish outside day, very similar to what we saw last Thursday. But right now, again, this market remains very bullish overall. The uptrending market here has been very, very strong. It continues to hold the 37.77.5, which is the FOMC key level from January. As a matter of fact, if you look at the various FOMC key levels from November, each one has continued to hold as support time and time again. And again, this January key level continues to hold as support as we head into the month of March. Overall, if we were to squeeze here out of the ES, we're looking for a move that finally takes us into 4K and likely beyond. Based off of the low of the month here, the average monthly range would take you as high as 40.82 based on 10-month average range. So somewhere between 40.15 and 40.80 could be the next upside target here heading into the rest of the month. Again, gotta want to hold that 38.50, 38.60 zone. Any failure there could open up another rotation to the downside. If we take a look at the NQ, you'll see here with the NQ, this one also holding support on a deep pullback last week. That 12.646 is the FOMC key level from December 16th. It's continued to hold as support. Price bouncing pretty significantly here from Friday's lows. A big breakout day here yesterday, and again a fade after trend day as this thing pulls back a bit back toward the previous session's midpoint, and now bouncing a bit to the upside. Overall, if this thing can continue to hold 13K on a near-term basis here, we have more upside that could be seen yet again, and that could take us finally into that 14K target up above. Right now you have a target zone between 13,800 and 14K that could be the high probability target zone based off of the low of the current month. So right now still showing strength overall unless price fails to hold 13K at this time. If we take a look at crude oil, you'll notice that crude oil has also bounced. A failure to hold below the previous session's low and close. A rejection of those levels, similar to what we talked about in the monthly outlook yesterday and what we talked about in the trading room and even at the end of the month last month, was that if we pulled back here into this pivot range, given the strength we've seen in this market, again, the idea is to buy that weakness for a shot at completing this move into 65 to 66, and so far we're seeing that play out at the moment. Additionally, what you'll see again is any price in an uptrending market that is below the previous month's close is an ideal opportunity to defend for bulls and rotate this back up. Again, we're looking for a market structure test somewhere between 65 and 66, which could be the last rotation we see that's bullish until we see some sort of major rejection that perhaps rotates this thing back down based off the weekly charts, again, that we talked about in the monthly outlook. So right now, uptrending market, you're seeing a defense at the bullish PEMA trigger zone and also inside this pivot range, which again suggests strength up ahead until proven otherwise. And like some of the others, this thing is holding an FOMC key level here as support. Prices below 60 have been defended so far, and as low as 45s there. That again suggests more strength until proven otherwise. Let's take a look now at gold futures. You'll notice here with gold, this one has been weak. It continues to show lower highs and lower lows. It continues to show weakness inside the bearish PEMA trigger zone, and now it has seen a significant violation of the 1760 support level, which is a major market structure level. That break and that violation right there suggests a move into 1660 and perhaps even lower over the course of the next several weeks and perhaps the next several months. One thing that we'll want to look at here is this rejection at the previous month's low, as that could lead to a bounce back up toward the breakdown point. Any bounce back into this zone between 1760 and 1780 and perhaps even as high as 1800, that could be an opportunity to sell it yet again. We have a bearish PEMA trigger zone, a lower value relationship with the pivot range. Any bounce could be seen as a selling opportunity for a further downside continuation towards 1660 up ahead. All right, that is it for now. Again, please join me tomorrow at noon for our PivotBoss Masters open house. We have our live sessions, 5-day live session event next week. It's going to be a lot of fun, and looking forward to seeing you then. All right, everyone, have a fantastic rest of your day, and I will see you in the trading room. Take care.